What's up, YouTube? Back again, and this time we're going to look at work ticker and its name Slack Technologies. So Slack is currently trading at $27 and it's been down since its earnings, which was on September 8th. So it was trading at a high of around $34 to $35 and it dropped all the way down to 25. And we'll kind of look at why it dropped so much and if it's a buy at this point. So we'll quickly look at Slack's business because most people aren't familiar with Slack. So Slack is a technology platform that helps enables companies to communicate. So you kind of look at it as something similar to Facebook, as in it's a messaging platform. So at the top you'll have things such as threads, and that's where you could kind of discuss any work related topics or even unwork related topics. And over here you have hashtags, so that's another discussion platform. And at the bottom you have the direct messaging platform. So this is something really new and it was only created a couple of years ago. It IPO'd just last year. So this is very different from the email in the sense it's a lot less formal, and the messaging platform is a lot more smoother, and messages go directly to the recipients right away. So rather than email, it's kind of you're going back and forth. Slack in the sense would be something like Facebook where it's a continuous messaging system. So in that way, it helps companies really communicate in a more effective manner compared to something like email or even Google email, Gmail, and anything in that sense. So nextly, we'll get into their most recent earnings. So this is for Q2 and this is their 2021 highlights. So total revenue was 215.9 million and that's an increase of 49% year over year. So you're probably asking, Rajan, why is their stock down? You showed that in the start it was down from a high of around $35 all the way down to $25 even after their earnings increased by almost 50%. And the reason for that is expectations. So analysts came in expecting more. So I don't know the exact numbers, but they probably came in looking at around 60 to 70% growth, and they only came in from 49% growth. So like I said in my previous videos, Wall Street only looks at short-term results. So even though they're growing by a really high rate of 50%, Wall Street doesn't care about that. They're looking at their 3 to 6 to 9 month view and saying, oh, these guys didn't grow by their expected 70%. Also, their valuation. So if you look at something like price to sales, usually I like to look at something like price to earnings, but because this is a startup and they don't have earnings, it's kind of hard to use something like price to earnings or even forward price to earnings. So in that case, you could use something like price to sales. And currently it is at almost 20. So in that sense, they're trading at a very high price to sales ratio and it's only been increasing every year. So expectations are for them to meet analysts' expectations every single quarter. And when that doesn't happen, their valuation is going to drop substantially. And other highlights, you can see that billings increased 25% year over year. Their gross profit is 86.8%. So technology companies usually have high gross profits. When we looked at Facebook, theirs was over 80% as well. And something interesting that you like to see is they have 87 paid customers that are bringing in $1 million annually. So they do have big companies signed up, and those are always recurring revenues annually. And when they get into a platform like Slack, they're very unlikely to switch over or even go to a new platform because employees really like to stick to the same thing and they don't want to learn something new because there is a learning curve and employees will have to be taught on how to use it. And lastly, we'll get into the accounting side and look at some numbers. So this is a 6 month ended and 3 month ended, and this is their income statement. So revenues increased from 144 million to 215 million. So that was that 49% that we just discussed previously. And cost of revenues actually decreased from 31 million to 28 million. So what is this telling you? It means that efficiency to drive revenues has increased when the actual platform it has been built out. So going forward, I think you'll actually see lower and lower cost of revenues in future quarters as well. So after doing all that, you get a higher gross profit as well. This is where a lot of startups and new IPOs actually come in short, is on their operating side. So they have three operating expenses, and that's research and development, sales, marketing, and general and administrative. So research and development actually went down from 217 million to 94 million. That is expected just because the platform is actually built out, and now they're not going to have those expenses going forward. Sales and marketing actually decreased as well from 136 million to 109, and that's really good to see because we have top line growth, but sales and marketing decrease. So that means that they're not using as many sales reps and marketing material to actually drive revenues. So I think going forward, we'll see this decrease and decrease quarter after quarter, just because now you're going to start getting into word of mouth advertising. Companies are going to start talking to other companies, and employees are also going to start telling their friends and family about the platform they're using. So rather than spending money on sales or marketing, we'll have more organic growth. General and administrative also went down. That's because when you start a new IPO, there's a lot of upfront costs. So those are usually in the earlier months. And after you actually get the business running, these costs generally tend to go down. So we had a loss from operations of 68 million, a huge increase from a loss of 363 million. So Slack will become profitable probably in the next 2 to 3 years. They had interest expense of 11 million. The previous year was, sorry, 11 million, and the previous year was 2 million. So what does that mean? Slack most likely took on debt. We'll take a look at the balance sheet and the cash flow statement and see if this is true. So net loss overall was 73 million this quarter, and the previous quarter it was a $359 million loss. So that is a big step up. And something interesting to always look at when you're looking at new IPOs is their weighted shares. So we had 368 million shares the previous quarter, and now we have 564 million shares. So what does that mean? It means that they're issuing more shares, and previous shareholders are actually getting diluted. So this is something you have to be very careful with when you're investing in IPOs, because the percentage of your pie is always going to keep decreasing because the company will keep um, raising money. And the last thing we will look at is the balance sheet of Slack. So Slack has two quarters listed, so January 31st and July 31st, July 31st being the most recent. So current assets, they increased their cash and cash equivalents from 498 million to 1.3 billion. Their marketable securities went down from 269 million to 216. So what is this telling you? It's always really important to not take numbers for what they are and make sure you understand what's going on. So we had a huge cash uptick of over 600 million. So it's important to know where this money is coming from. Is it from issuing more shares? Is it from issuing more debt? And all the answers are always going to be in the balance sheet, cash flow statement, or the income statement. So we'll look at where all this money came from, and it should be in the current liability section and the cash flow statement. So going down to total current assets, we had an increase of over 700 million. So most of that's going to be from the actual cash and cash equivalents section. So total assets increased about 700 million again. And like I said, that's going to be from the big cash increase. So we had accounts payable decrease. So what does that mean? That means we paid off some of our accounts payable. We had some of these smaller expenses uptick and downtick, but they're very insignificant. We had deferred revenue increase as well. So deferred revenue is money that we haven't collected yet. And here's our $6 million increase. So we actually took on some debt. So the reason we took on debt is just because it's at such a low interest rate. When you're looking at something like inflation as well, you're actually probably most likely making money. So taking on debt in a low interest environment isn't always the worst thing. And so total liabilities increased almost by double. So we went from 717 million all the way to 1.3 billion, but most of that is just from this convertible senior note of 630 million. And when we looked at the income statement, we had the $11 million interest expense, so that's where it's coming from. Slack most likely took on this debt for two reasons. One, it's at a very low interest rate, and two, just to be sure, because of the virus situation we have going on, it's really important to have extra cash in the business just in case there are upswings, downswings, etc. And overall, guys, we'll leave it there. Let me know if you like this type of video. Give me some feedback, leave comments, subscribe, and leave a like. Thank you.